typical disclosure here as we lead into some estate planning basics. So I really just want to lay the foundation here and the groundworks of basic estate planning, which, as we know, is going to consist of your will. It's the most common estate planning document, and really you're just directing who is going to receive your property and the assets after your death. It's straightforward to create, and it can be changed. Coupled with the will is going to be an executor, which is the individual or the person that you want to carry out those directions. And if you have children, naming a guardian or guardians would be utilized in the event that you were to pass away or become incapacitated. In addition to the will, a trust. And a trust is an arrangement where you're going to appoint the trustee to hold title to property on behalf of beneficiaries or your beneficiary. The person setting up the trust can dictate how and when. And I think that's the big difference there. There's control when utilizing the trust as to how assets or when assets will be transitioned to beneficiaries. Also to note with a trust is the avoidance of probate. So important to remember, assets inside of a trust and owned by the trust will avoid probate, whereas assets not owned by the trust will be exposed to probate. Justin, maybe touch on probate a little bit more and anything else that I missed in terms of how you might explain to clients the difference between a will and a trust and when one might be utilized to complement the other.
Yeah, so probate is really the process of submitting a will to the local surrogate or register of wills or the county official. And the probate process is an entirely public process. So if you have a will and you submit a will to probate when a person dies, anybody can see that will, where a revocable trust is a private document. It doesn't get submitted to the probate office, and nobody is going to see what is inside of that will. One of the things to keep in mind is there are certain jurisdictions that are really easy probate jurisdictions, and there are other jurisdictions that are really hard. So New Jersey, for example, Pennsylvania are easy probate jurisdictions. Florida is a really difficult jurisdiction to probate in. So depending upon where you live, that may determine what your estate plan looks like. And then one other piece is you also want to make sure that your non-probate assets are taken into consideration. So making sure beneficiary designations flow with the general flow of your estate plan, right? Oftentimes people focus on a will and they may forget about updating their beneficiary designations on an insurance policy or a retirement account or something like that.
Yeah, and that's a great point. And many times it's overlooked or individuals are not aware of that the beneficiary designation is going to supersede the will. So important to keep that up to date. That's a process at Ausperity that we typically like to do every several years. Connect with clients, remind them of their beneficiaries, ask for any changes, and we really hit home on anything that may not have a beneficiary designation to have that updated. So you mentioned briefly revocable trusts. If you could, let's go through the differences between a revocable trust and an irrevocable trust before we kind of really dive into the digital era and digital planning.
Yeah, so a revocable trust is simply a will substitute. A revocable trust is going to be the person for all intents and purposes. For tax purposes, the person will have complete control, right? So Rory, if you have a revocable trust, you'll have all of the dispositive provisions of your estate in that trust, and you'll control it. You can amend it, you can revoke it, just as you could amend or revoke your will. It's the same thing with a revocable trust. With an irrevocable trust, there are different reasons for having different types of irrevocable trusts. So usually they're being done for maybe asset protection purposes or estate tax planning purposes. Right, we're doing something to remove the control of the individual from that trust. So it's kind of hard to say what an irrevocable trust is specifically for. They're really customizable based upon what it is you're trying to do in a specific situation.
And this is likely where you come in to kind of work with your clients and discuss the benefits of a revocable or an irrevocable, or even provide advice for when to utilize an irrevocable and how to put that into play.
Right. So sometimes we'll use something called a GRAT, or we'll use a SLAT or a CUPER, right? These are all different acronyms for different types of trusts that do different things. ILETs, right? So yeah, those are conversations that we have with clients to talk about what specifically their needs are and how we can do planning and address their needs in the various types of irrevocable trusts.
Great. Well, hopefully this lays a great little foundation here. In addition, some other estate planning basics is going to be a power of attorney as well as healthcare directives. We can get into that offline. I also want to make everyone aware we are going to be doing some Q&A here. Jen on the team is going to be kind of overseeing that. So feel free to utilize that feature. If you struggle to utilize the feature, you can also send Jen an email if you have any questions, because we will try to stop here and there and address any questions that might pop up.
Thank you for watching our video. Please remember to subscribe to our YouTube channel. Look at our links below for ways of getting in contact us, and message us if you'd like us to add you to our monthly newsletter.